Our accounting partners here on the country are Crowe, Horwath, 24 branches around the country. There's a Crowe Horwath branch somewhere near you. Today we're going to talk to their tax expert, Tony Marshall. He's based right here in Dunedin. And Tony, let's have a look at the government's tax agenda because it's somewhat different to what National was proposing before it got tipped out of government. We'll start with those tax cuts that were going to come our way on April 1. They're gone.
That's right, they're gone, and they were really just a change to the thresholds when different rates kicked in. So they've been returned back to what they've been for the past few years.
So the tax cuts have gone, Tony. There are, of course, other expenses that we have to pay for, and that's probably where the money's going to. Let's have a look at some of these. The Families Package, paid parental leave. Is this just more targeted than across-the-board tax cuts?
Well, certainly paid parental leave is targeted directly at those people having children, and an expansion of that to 22 weeks, and then eventually up to 26. So, I'm a parent with 4 kids, and you can certainly see how that would benefit people in that space.
Gee, an accountant with 4 kids can't count, Tony.
Yeah, yeah.
Normally, accountants are much more frugal than that, I jest, of course. We've set up a tax working group, or the Labor coalition government has. They're going to have a look at capital gains tax, amongst other things. Do you think this is a given, that it will come in some shape, form or other?
Well, every previous tax working group has recommended capital gains tax in some form, and governments have generally shied away from it because it's not a particularly popular policy. But, it's not one that actually generates a huge amount of revenue. In Australia, they've had a capital gains tax for some time, and of their tax revenue, capital gains tax only accounts for about 2%. So it's not a huge revenue winner, and it creates actually some bad habits amongst people, particularly where the family home is exempted.
Give me an example.
Yeah, so because the family home is exempted, there is an incentive to basically continue to build bigger and bigger and more expensive family homes, because you know that you're not going to be subject to capital gains on that when you sell, rather than sticking your funds into your business to grow your business, which will be subject to capital gains on sale. So it has some negative effects as well as generating perhaps some tax revenue.
Tony, do you think a capital gains tax would go down well with the farming community, bearing in mind most farmers I know that they make more out of capital gains on their farming property than they ever do out of the yield or farming it?
It's not popular in that sense, because, and like you say, for exactly those reasons. Presumably there will be a baseline set if they do head down that track, and they certainly did that in Australia, where you valued your property when the capital gains tax came in. So if you've owned it for 30 years already, you don't get pinged on capital gains tax on that. It's only from today. So at least historic gains will be preserved for people.
And one more to finish on, base erosion measures. And I had to ask you off air what these were, but this is basically your Apples, your Amazons paying their fair whack of tax in the country in which they earn the income. But this could be a bit of a double-edged sword for us.
Yeah, that's right. Like it's not as simple as simply looking at their New Zealand-derived income and saying, well, we're going to stop them taking big deductions for costs back to head office, and we'll tax them on what they actually derive in New Zealand, and I guess negate the expense side. If we did that, we need to think about our exporting companies who, say Fonterra export a lot to China. China turns around and says, well, actually, we're going to tax Fonterra on the income that it derives in China, even though it may have no physical presence there. So for an exporting nation, we need to think very carefully about how we go about taxing those multinational corporations, because foreign countries could do the same to us.
It might come back and bite us in the bum.
It might. Exactly.
Food for thought. Tony Marshall, tax expert from our accounting partners here on the country, Crowe, with 24 branches nationwide. Thanks for your time today.
Thanks, Jamie. Always a pleasure.